Hey, Andy, Jamie, how's it going today?
Hey Scott, pretty good, thank you. Jamie, how are you, my friend?
Good, 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 Andy. Feels like we haven't done these webinars in quite some time due to the fact that the past 2 weeks we had our record-breaking test drive, but our good buddy Steve is on a well-needed vacation and probably due back anytime now.
Yeah, he's probably there by now. But anyway, yeah, it has been a while, a little rusty, but that's okay. I think we can. We it's been doing this long enough. We should just get right back into the swing of things. So pretty quickly. Hey, Mike C. Yeah, a lot of good crowds. Let's get started. Before we do, I'm just going to go over some legal stuff and talk a little bit about our great support and education here for the new people in here. All right. And thank you. Thanks everybody for showing up today, taking some time out of your afternoon. Let's go over to the legal disclaimer here. We are content providers. Okay, this is for educational purposes only. Nothing that you see or hear today should be construed as investment advice. That is not our purpose. If you are looking for that, you probably want to seek someone out who is licensed in that capacity. That would be a stockbroker, an RIA, somebody of that nature. All right, you're not alone with trade ideas. We want to make this very clear for you, okay, that we know it's a very powerful software, and it's our job to to coach you, to educate you, to train you, and we have many streams to do that. One of them is the traders room. I think probably most of you guys have been in there. If you haven't, you need to get in there because it's free for everyone. You do not have to be a subscriber to Trade Ideas. And it's a great moderator by the name of Barry Einerson, and he does an incredible job of moderating the room and also trading. And there's a lot of great traders in there. So if you haven't been in there, get in there because it's also a great place to learn the product. Barry is very, he's one of the educators here in the trading room. He's not only a trader like all of us, he does enjoy helping you with the software. We also, if you can see down on the left side there, we have webinars every day, Monday through Thursday. It's usually myself, Jamie, or Steve Gomez that are kind of manning the ship in those paired up in twos. But on Wednesday, we do have our CEO, Dan Merkin, and our CTO, Brad Williams. They will open it up for a great Q&A session, and they also share some content as well. And not only that, they'll show you little gadgets and trinkets that are coming around the corner. Probably not trinkets, it's probably not a good word for it. Bells and whistles, if you will. All right, and of course today is the trading studio, and let's not forget, guys, we do have the daily support session. This is every day, Monday through Friday at 12 Eastern time. Hopefully you can make it during that time. It's a great place to come and just ask questions. We do desktop sharing, so you're looking at the software, and we can easily show and answer your question using a live stream is what we use, a YouTube live stream. So we'll have a slide to show you where to go to come to that. And once again, it's every day, Monday through Friday at 12 Eastern time. And here it is. Lo and behold, Steve had it. I'm using Steve's slides, so they're a little bit different than mine. And I think Scott may show you this again, but if not, here it is down at the bottom left. You can see that's where you go to find the live stream. It's the same stream as we use for the trading room as well. All right, and once again, every day, Monday through Friday at 12 Eastern time. Be sure to check that out if you have, especially if you have questions about the software. This is Steve slide that he throws in. He stole it from Brian Shannon, man and machine combined. Paul Tudor Jones said there's no man is better than a machine, and no machine is better than a man with a machine. So, and that's what we kind of believe in here at Trade Ideas. We do have some artificial intelligence, but we think it works best if used by a human, and that tandem can work very well when it comes to trading the equity markets. All right. The agenda for today. All right, this is going to do the market recap. Actually, Steve had this hanging on by a thread. I forgot to release that, so just pay no attention to that hanging on by a thread. I'll do the market recap. We'll talk a little bit today about nice gap up above all major averages, and how it traded throughout the day and what to possibly expect in the days ahead. Then I'll hand it over to Jamie for the AI recap. He'll just go over a few stocks. Pretty good day. Considering the big gap up, it's usually kind of tough when you get these major big gaps from the overall market, but Holly fared pretty well today. TOW, I actually kind of helped this. I actually suggested it, and since I was going to be doing the trade of the week, Steve said, well, which one do you want to go with? You're going to be doing it. And I said, I want the Amgen on a pullback, and I'll talk about that. We do not have a trigger yet, but things are looking interested, possibly a trigger for tomorrow on that one. And I'll have more to say about that for sure. And then I'm going to talk about a strategy that Steve and I, when we started to day trader, we developed. I'll talk more about it. It's a swing scalping. It's kind of short-term swing trading is what it is. It's kind of, we call it a hybrid between day trading and swing trading. Anyway, we'll talk about the setup and how to anticipate and ride the wave. And I'll have 3 good examples that I've actually taken live trading. One of them I'm still in, and I'll go over, we'll go over that with you. One of them was a real good trade. One of them didn't pan out that well, and the other one is yet to be seen, but it's doing well so far. All right, let me back out of here, and Jamie, if there is any questions that I need to hit on, just let me know.
Yeah, we're all caught up thus far.
All right, we'll do the market recap then. And once again, they're still filing in. We got a decent, really good crowd. So here's the SPYs. We look at the SPYs mostly because it's probably the best weighted index out there. It comprises of 500, different stocks, and I think they're weighted more fairly than what you're going to find in the Qs. So here's what we have today. And you know what? I don't think this was correct. It's not just our charts, obviously. It was jacked. So we cannot look at this daily candle and trust it, because I don't think this wick is there. I think we pretty much close to lows. But like I said, somebody correct me if I'm wrong. But needless to say, we closed pretty much right at the 200. Let me zoom in here. And let me just go ahead and pull up my Epic pen real quick. You'd think I would be prepared and have that ready when I go. But as it's pulling up here, we'll just talk about what we're seeing here. I mean, gosh, guys, we're way above the 50. Above the 20, above the 10, and wow, we made it above the 200 today. But it was a gap, and we closed, I have to say, just right below it, maybe a smidge below it. But it's good enough for government work, so they say. So let's just say we're closed pretty much right at the 200-day moving average. Interesting. I would like to have seen, if you're bullish, I always like to see them trading, trading up. In other words, opening up flat or maybe up marginally and then trading up to this level versus a big gap up and trading down to this level. So, but if you're just looking at points on a graph, still an up day. We closed right at the 200-day moving average. And like I'm kind of accustomed to doing, I like to kind of set a line and see where we are at and we got a little bit of congestion over here. Nothing what I would consider to be a serious pivot line unless I go back. And as I go back, I see, yeah, you know what? I would call this a pivot line because we have some serious congestion right there. And, if somebody wants to argue and bring it up higher, they could, right? Pretty much right where we gapped today. If we consider this to be the pivot, I think this is probably more of a pivot. So that's pretty much where we gapped up today and we sold off. So that is a key area to me. I'd like to see us get above that level because once again, this was a big pivot back over here, a double top that we finally blew through. Okay, this was resistance. We got through, and I pulled up my Epic pen and I'm not showing it. Okay, we got resistance there. We got resistance there. We finally blast through. And then what happens? We came back down. This becomes support, supposed to be, and it did bounce briefly, but then we got back through it. Now what happens when you go back up? It turns into resistance again. So that's where we gapped up at. So that's kind of a key level in my eyes. All right, so that's an area I'd be watching to see if we can get back above, that level there, which is pretty much right where we gapped up to. Other than that, there's not a whole lot to talk about. I mean, I'm surprised, honestly, after what we saw back over here in March. Boy, you talk about a resilient market. I mean, from everything, the shutdown and everything, and whoa, the impact it had on the economy, and we're still. That's why they say, what they say, what's the old saying? The economy is not the market, or something like that, Jamie.
Yeah, the market is not the economy, and vice
No.
versa. I was just thinking about that myself.
Yes, that's exactly right. I mean, you can get it in the back of your head. Trust me, there's tons of bears out there that are just getting torched right now because they're looking at all the financial data coming through and all the jobs numbers, the unemployment numbers, and they're going, what in the hell is going on? This shouldn't be happening. Well, once, just like Jamie was saying, the economy is not the market and vice versa. It's so you kind of got to put that in the back of your mind. It's good to know, but don't let it influence. You remember, price is the only thing that pays.
And also, hey, Andy, you know as well as I do the herd mentality. Just about everybody I know, including me, we thought we were going to go retest those lows at least one more time.
Sure.
Right.
Mm-hmm.
But of course, we did not.
Yeah.
So I guess the market knows something that we don't.
Yep. Yep. Now, that's not to say we still can't, but at the same time, usually you would probably do it before this action we're seeing right now.
Yes.
But yeah, let's. Things can change, but yeah, I mean, so far there's a lot of people that are wrong, including myself. So I thought we would a good chance, we're going to test those lows as well. And Qs, once again, heavy weighting here to the big five horsemen, close to all-time highs. So, but still kind of an ugly day there. Not a cloud cover. They didn't, cover this body, so we can't call that a, big dark cloud cover, whatever they do it. But anyway, Jamie, that's all I have on the overall market recap. Do you want to add something, or well, you kind of already did, but
pretty much hit it on all fronts. I concur, Doctor.
Okay, all right. Well, if you want to grab it and show us a few Holly trades, I appreciate it.
All right, ladies and gentlemen. Welcome to my desktop. We're going to be talking about a few of the Holly trades that were produced today. And if we kind of glance over here at the channel bar real quick here, we can see all the modules finished in the green today. What do we have? 1.0 kicking out 5 signals. The values that you're seeing over here in the channel bar, $98 on 1.0, 20 on 2, and $100 on Neo. These numbers are assuming trading 100 shares per trade. Okay, so we can just say up a point for Neo on 4 trades, up $20 on Holly 2.0 on 3 trades, and almost $100 on Holly AI, kicking out 5 signals here. So we had a total of 12 signals for the 3 AI modules combined. Now, typically what we like to do in this part of the webinar is talk about a couple of different things, and those things would be trade arounds, and well, we used to call it risk off, risk on spread. Now we call it conservative profit versus moderate profit spread. And you can see right here, got my all trades blotter sorted by moderate profit here, biggest to smallest, and then we can see conservative profit over here. Now, kind of going back to that slide that Andy was showing at the beginning of the webinar, the Paul Tudor Jones about man and machine, we can apply that perfectly here with the AI, because what is the AI's strong suit? What is its superpower? And that is the signals that it brings us, which are all statistically weighted based on the back testing and the optimization that the system did the night before, or in this case, Friday night. Or excuse me, yes, Friday night, since we were closed Monday, and bringing us these statistically weighted entries. And of course, just because we have statistical probability on our side does not necessarily guarantee success, but it's one of the closest things that we can, kind of rely on. So let's see here. We got 2 different ones here for showing how to possibly extract the spread here between conservative and moderate profit. And what we're looking for here is a decent spread between conservative and moderate profit here. Now on this first trade, Dollar Tree is a great trade, but we don't see a big spread. We only got about what, $11 in there between 379 and 368. So not really worth going into a lot of detail about. But the next one down here, HEP, we're going to save that one for last because that one's juicy on several fronts. Let's just go ahead and look at the DOYU. DOYU. We've got conservative profit, which the AI booked in conservative mode of 46.25. Now, before we go on here, I just want to talk a little bit about these totals that you're seeing here. You might be thinking, well, based on what I'm seeing in Jamie's columns, it's not going to match what I'm seeing over here in the channel bar. And that's because we're still waiting to update these panes over here to be reflective of what we see here. So these numbers over here are assuming 100 shares per trade, but that's not the way I'm displaying my information here. And I'll show you how I'm doing that. If I go to Tools, Options, and then I go to AI Trade Sizing, you can see here you've got several options on how you want your all trades blotter to report. And we could do dollars per trade. I could dial it in at 100 shares per trade, in which case they would match the figures that you're seeing over here. But I'm using the risk-based stop, basically telling the system, you know what, I don't care what the price of the security is. I just want to risk $100 if the stop loss gets hit. And by using this value of $100 on stop losses, the system will automatically size me accordingly as to the number of shares. And we can see here, Dollar Tree, if I was allocating $100 stop loss, I could have been in 567 shares. On the DOYU, 370 shares. Okay, so that's what these totals are based around, is this share amount using the stop loss value of $100. Okay, so here we have the DOYU. We've got conservative profit of 46.25, but if we would have accepted a little bit more risk and not necessarily taken the exit signal that the AI originally produced, we could have scraped out a little over 2 times that profit. Now let me drag this column over here. Conservative exit reason. This is going to give you the reason why the AI exited under conservative mode. And there's 5 different reasons why the AI could have gotten out of the trade. First, we have a stop loss. If the stop loss gets hit, boom, we're out of the trade. We might have a profit target get hit. We also have a timed hold assigned to each trade as well. And since the AI is all geared around intraday, we can consult the strategy panel down here at the bottom, and we can see what all of these strategies are geared around. So when we're looking at the DOYU, profit save was the reason that we got out of the trade. So just to recap real quick here, profit target or stop loss or timed hold comes up. That's 3 exit reasons. And then we've got profit save and reduce risk, which gives the AI the ability to exit early from a winner in profit save mode or early in a loser in reduce risk mode. So the reason the AI got out in conservative mode for the DOYU trade was a profit save. Now here we can see on the 15-minute intraday chart here, the original entry signal. And by the way, we did have a dual signal in DOYU. This was the first one about a little over 8 minutes into the open, since the market opens at 8:30 where I am in the central time zone. Then we had another one about 2 hours into the market from pullback long, Holly Neo. The first one was from Neo, but it was the breakout long strategy. So sometimes we're going to see these dual signals, sometimes at different times from different strategies. The other scenario is sometimes we can get an exact duplicate, meaning two of the strategies were in the different modules, but fired the trade at the exact same time. But in this case, we had different times of the day, both from different strategies. So on this one where the spread was pretty decent between conservative and moderate profit mode, we're going to be looking at this first exit signal right here, or excuse me, entry signal, and we can see the entry price was $7.93. Now you might also notice this shaded area on the chart. This is highlighting the time spent in conservative mode. And I put a little orange arrow here to show you this is where the AI exited, right about here, okay? So it didn't milk it for all it could, it took a little pullback, and then based on a little time decay in there. The longer we're in a trade and it's not going in the direction, the more likely the AI is to pull the plug on it prematurely, whether it's a loss or a winner. So in this case, entry price of $7.93 and pull the plug at 8.06, making $46.25 on a total of 370 shares, which we can see right here. So the name of the game about trying to extract some of this spread between conservative and moderate profit is to simply not take the AI's advice on the exit. Okay, a lot of the times based on our chart reading skills and what the stock has done, we can make better exits than the AI. Going back around to the AI's real superpower is delivering us the statistically weighted entries. So if we would have ignored the AI's exit right here, we would have had to sit it for about an hour here before we got the rest of this little uptrend here on up to 8.45. And if we would have held it into the close, which are these closing prices over here with the little sell arrows, we could have gleaned almost twice what the AI did in conservative mode just by taking a little bit more risk, notching it up to the next risk level, and we could have made 98.05 holding it into the close. If we top ticked it, even a little bit better, but that's typically the exception and not the norm. Most of the times we're not going to top tick our trades. So a decent spread there between 46.25 and 98.05. And let's see here. The next trade around, or the next, well, we had two different ones here with decent spreads between the conservative and moderate mode here. Let's just go ahead and look at HEP here. This was a really good one, and then it also has some added benefits for following the rest of the week due to what it's doing over here on the longer term. But let's take a look at this one on the intraday. Original signal right here at 1627. This is always what we like to see, immediate gratification. Didn't really ebb and flow around the entry signal, just took off nicely. Took this initial pop up here, then settled out right here. AI exiting the trade right about the 1650 level on the HEP, 1650 exit, 1627 entry, as we can see right here. So not quite double potential here between 78 and $1.28 or $128, but some decent spread nonetheless. So once again, had we ignored the AI exit signal right about here, it kind of hemmed and hawed, went a little bit lower right here before taking that next leg up, getting all the way up to 1680 and holding it into the close. We could have gleaned, looks like an extra dime holding into the close and no more than 20 cents total, even if we top tick the thing up here. Now, decent spread between conservative and moderate profit here, but even more interesting if we look over here at the longer term, currently looking at the daily here, and even if I put it on weekly, you can see not really any congestion to pay attention to here, but we closed and we're getting into this little gap here. So a lot of the times, once we get past these areas of potential resistance and we get into a gap, like what you're seeing over here, whether it's the weekly or the daily, then that's something you might want to keep your eye on for the following trading sessions, because a lot of the times when they get into these gaps, there's a lot of, the potential to get, sucked all the way up here, or just slowly over a period of 4 or 5 days, potentially cover that gap. All right, so that's like a little vacuum in there. So HEP is one that you might want to keep an eye on moving forward for the rest of the week. So those are the two examples of trying to extract some of the conservative and moderate profit spread here. Only one other one that I'll mention here, and that's what I like to call a trade around, okay? And this is, let's see, plan, there we go, okay. All right, plan was a short sell today. And we can see right here, the AI call the short sell signal at 47.83. And then it quickly gets stopped out at 48.16. Now, number one, that was a pretty tight stop, okay, for a almost $50 stock here. But nonetheless, we can see right here, get in, then bam, it tickles that stop area, and then it rolls over and does what we hoped it would do. So, that brings up another good point. The statistical probability that the AI delivers is good for the entire session. Now, sometimes we get stopped out. Sometimes the timing is just a little off. So this brings up another good topic. It's not just the original entry signals okay, that can be of great value with the AI. A lot of the times when it makes an exit signal, if it hasn't moved too much or if it's just tickling that stop out by a hair, it can be a really good, what we call trade around. Go back to the example that I've used time and time again when Andy and Steve and I used to have to go to an office to trade. We hear a guy bitching and moaning about getting stopped out or almost getting stopped out. We'd pull the stock up and go, oh yeah, it looks good now. And while that guy's getting stopped out, we're taking the other side of the trade and making money off of that information that he involuntarily coughed up through his complaining, okay? And the AI can facilitate trades in that exact same capacity. If you see the AI get stopped out of a trade and it just barely tickles the stop level, and then we get a nice open on the next bar, we can easily short that stock on the exit signal or as it's getting stopped out, get a better price than the AI, and of course use what we feel is, you know, an acceptable risk level here. And on this guy right here, as Steve likes to say a lot, it's the second mouse that gets the cheese on this trade. Okay, so just keep that in mind, especially if you're new to the AI system. It's not just the original entry signals that can be of great value. Sometimes it's the exit signals that can act as great entry signals as well. Okay, and this is a great example of what we would call a trade around, seeing the AI get stopped out, taking that second push through the entry level, and making the money in that capacity. All right, Andy, any other
All
things that
right.
you'd like to point out about the AI before I kick it back over to you?
No, you covered it very well, Jamie. You can go ahead and just kick it back.
Here we go. Well, I think I did it. There we go.
All right. Let me make this chart a little bit small. You know what? I'm going to keep it kind of big because I'm going to be talking about some daily trades off the daily chart. So I'm going to keep this kind of big here. Yeah, Pete, you know, ALSN, the one you're referring to in the chat there, you got a question about it. That did do 1.34 million shares a day. So that's not really that low volume. Now, there could have been a slow time in the day where on the 1 minute volume, that's, you know, not unusual if you get around lunchtime and they, you know, you see very little, if hardly any volume on the 1 minute ticker. But that being said, you know, Holly will trade some stocks that may only average 200,000 or 300,000 shares, but that's usually, it's because it's associated with volume. And so that day it may do 500 or 600 or whatever, but in the future, you're going to be able to, I think you're going to be able to configure your settings to where you can, you know, there'll be more customization of Holly. Right now, you can only just do the strategies, but that is something that we've kicked around in meetings about. All right. Yeah, I want to talk today about something called swing trading. I'm swing scalping. And the reason I want to talk about it is because it can be really profitable. And I know a lot of people come in here with aspirations of being a day trader, making a living day trading, and it is possible, but it is very hard. But I know it's possible. I did it for 17 years, you know, just grinding out a living, you know, trading 100 to 200,000 shares a day. But, you know, that being said, I do want to also say this method that Steve and I, when we were at Today Trader, we created this business called Today Trader. And that was one of our, this is one of our method that we used in a company called Ditto Trade, where people could pile in to our trades with us. They would attach their account to ours, and anything we bought would buy it in their account as well. It was a great concept, just didn't have any marketing. They didn't have any marketing money behind it, never could really take off. But we did very well in that. We outperformed over 3.5 years, outperformed the spiders by 38%. And it was all using this method I'm about to talk about today. It's called swing scalping. So basically, like I said earlier, it's a hybrid between day trading and swing trading. And it doesn't take a lot of capital, you know, to do this. I know a lot of people say, well, you know, I'd love to, you know, swing trade, but gosh, I need, you know, to make any money, I need, you know, a couple 100,000. It's not the case, because when you're swing scalping, you may only be in maybe 2 to 5 trades at a time, and you're your average hold time is only about 3 days, and then you're out. I like to say, you know, you're fine. We find the setup. You kind of anticipate the move. That goes against what a lot of people think. People think you should wait for that break, but I'm going to show you where anticipation can really pay off. And then you ride the wave. You know, you look for that explosive move, and you ride the wave for about 3 days. I got a great example of one that I just did over the last few days, and I'm going to show to you. And then I'm going to show you one that didn't work out all that great. It was actually the trade of the week. Okay, but let's pull up a chart here so I can kind of show you what I'm talking about. Okay, the first one that didn't work out all that well, and I'm going to go in order here, was a glue. Okay, well, this was a trade of the week on this day right here. Okay, it was a beautiful setup. I will take a shot at these all day long. When you get a big move like that on volume, pulls back and catches this 10-period moving average right here. All right. And then what would you like to see happen was it to bounce off this 10-day moving average and keep going higher, possibly approaching and maybe trying to take out this high over here. I entered it on this day, and didn't, you know, the most I got out of it was this. I was at least hoping to get over 10. Did not happen. But the key is, and I think Steve, when he wrote the email on here, it was probably if it gets a close below the 10-period moving average, you get out. I tried to hold on a little bit longer because it was so close to the moving average, but today, right at the open, I stopped out when it took out that low right there. So that's a trade where I was setting up for a quick move, maybe a 3 or 4 day move. I was going to bang it out, take my money, and run and move on to the next one. Okay, and did not work. Okay, that was a loser there. Now I'm going to show you one that really worked good. But once again, I'm applying the same concept. Even though these are different types of setups, I'm still applying the same concept. I'm looking for the setup, and then I am looking to make a move. Let me erase this. Anticipate the move, and then ride the wave. All right, the other one. Oh, and by the way, I found that one in this pullback above 50 SMA Pro. Okay, on this day right here, it was coming through my pullback above 50 SMA Pro. You guys have access to that. It's in channel, I'm sorry, not channel 4 anymore. It's in Trader's Vault. Okay, as a matter of fact, you have all of these in Trader's Vault. All right, the next one is this revenue growth fishing. If you've been attending any of my webinars, you know I've been talking about this a lot. I'm finding some really, really good trades in here, okay? One of them, just a few days ago, was TLRY. And this was a beautiful trade that worked out very well. And here's what I liked about it. And I can't remember, guys, which day. It was probably coming through on one of these days right here, these 2 days right here. I think I did enter it on this day, but I'm just trying to remember so I can pull it up and show you, but I can see the other one in there, and I'll talk about hitting it in a minute. But this TLRY, what I liked about it, if I stretch out the base here, I'm going to show you, you got a nice little base that's being made. You hit a bottom down here, bounced up, and then look at this going sideways, forming this wedge, beautiful little wedge right here over the last, you know, couple of months. And I like, this is what I'm talking about, anticipating. Okay, I'm loving the way this is setting up, and not only that, it's above its major moving averages. You got the 50 down here, you got the 10 coming, you know, right at the 20. So the setup is there for me. Okay, and the other one I'm going to show you is going to look very similar to this that I'm currently in right now. But this is the difference between a trade that works and a trade that didn't. You saw that when I told you I got out quickly. Well, today, this is the perfect wave. I rode this. Now, I did scalp out some the first day on this big move, okay? And actually, when I got the drive down on this day, I bought some back. But to make a long story short, okay, I basically held it from, I think the price was around 840 to about, I got out of my last chunk today at 1140. Okay, I just set an offer out there. I saw it going to highs. I got my huge percentage move, a great trade. I made 5 times more on this one than what I lost on the one I just showed you on glue. And that's the key to trading, guys. You can take the one, two setups, two juicy looking setups, and one will work and the other one won't. But the key is I identified that that one wasn't working early. I got out, I obeyed my rules, I got out, and this one I let run and it worked for 3 days. I'm out now, you know, maybe if it pulls back, I'll look at it again, but this is the idea behind swing scalping. You look for these setups. A lot of time in explosive stocks, ones like this, you know, that with high revenue growth, and you ride that wave for 3 days. And I just know, guys, there's a lot of day traders that were probably trying to day trade this thing, you know, and then some that I'm sure did very well, but the majority of them probably lost money when, if you would just take a position and ride it for 3 weeks. Now look, it was an $8 stock, okay? You can make some really decent money and not have to sit there and just grind out for 20 cents, 30 cents here all day long. I've done it. I know how taxing it can be. And I know, and I'm not, hey, let's put it all on the table. Myself, Jamie, Michael, and Steve opened up an account a while back. We were going to day trade. And we started out, and we never got killed, but we weren't making any money. I mean, of course, we're working to trade ideas, so it's really tough. We do work, you know, it's tough for us to focus like we normally would for, you know, day trading. But then we swing to this swing scalping and swing trading, and we have been just destroying, you know, just killing it over the last, you know, 6 to 7 months. And so I want to let you guys know that don't feel like to make money in the market you got to day trade, okay? Because there's other ways where you can apply, you know, 20% of your capital and make some really good money in 3 or 4 days, and you're jumping out of that and on to the next one. So you can sit here and juggle 3 or 4, 5 stocks, you know, just, and not having to put forth all the grind that you know, that's in all the hostility of day trading, man. It's a tough racket. All right, now I'm going to show you the one that I'm in. This is the other one, CMD. You're going to see, and this one you can see it right here on this day. Okay, if I go back and show you in history, this is from 5/19. Okay, this is when I entered the trade, which would have been right here, I believe. That's 5/20. So yeah, 5/19. This right here. Once again, same type of pattern. Look at this nice base it's forming, and you got a nice little wedge pattern developing here. Oh gosh, it's awful. Can't even draw a line here. See if I can do that a little better. You guys can figure it out here. Okay, so you got a nice little wedge pattern. It's above, once again, looks very close to that one I just showed you. Above the 50, above the 20 and 10. Everything is setting up here. It's going sideways. So in other words, it's not falling back like over here. It jumped up, came back real quick. This one is kind of going sideways above those moving averages. And I love what I saw. I mean, sometimes it's tough to hang on, but you got to remember you're swing trading on this day right here. Okay, let me zoom out here and zoom back in here. Now, this day was tough, but I wanted to let it close. And when I see that right there, that's just strength. Tried to sell off, shake the trees, and bounced up and closed back, formed a nice little hammer. And then today with the market, I get my nice little gap up. Now, this one still has work to be done. This could fail, but to me, this is looking pretty juicy, okay, because it's out of that wedge now, and I think the next target, you know, could be if it breaks, you know, through this level right there. I'm not sure why that didn't work. You know, we could be, you know, off to the races here. Probably needs to get to that level right there. So anyway, three trades there. The same, I'm applying the same type of strategy, the swing scalping strategy. Okay, I'm looking for these patterns that are forming a setup that could be explosive, and then I'm looking to, you know, to ride that wave for about 3 days, and then bounce, and then move on to the next one. Jump out, paddle back out, and look for the next setup. And you know, and obviously with our software you can find it. And by the way, this revenue growth fishing, I have found some beautiful ones in here. And I'm going to kind of give you an idea of when I'd like to look at this. And like today, I wasn't really looking for that many longs. Okay, the market has had a big move, big gap up today. But if we pull up the spiders on the daily, and you know, you get pullbacks, let's say like on this day right here, you get a nice pullback in the market, and that would be 513. And I have no idea what's going to be in here, but we're going to go take a look. That would be what, 519? No, what did I say? 513, wasn't it? Let me make sure. Yeah, 513. Only one. Let's see if there's more stuff in there on. Sometimes at the close they'll fall out of there. Let me go look and just. Oh, that's 11:20. Let's go a little bit later. Let's go 2 o'clock p.m. I was hoping there'd be a few more in there, but it was a couple of days of. 2 o'clock p.m. No, there's nothing in there. Let's just go. Let's find another date here. Put it on 3. Well, sometimes there's not going to be anything in there. I guess on a pullback day. Let's try another date here. Let's go to 5. Let's go to a week ago, 519. Momo. Yeah, Momo must have had earnings. Yeah, Momo had earnings. Yeah, if I see earnings over here, that's another thing. I'm always looking, guys. Put earnings in your single stock window, and if you see stocks coming up with earnings, yeah, you just don't touch those. Come on. All right, this Venom here. Look, there's a beautiful move right there. This was on 519. So it was forming, that would have been right there. So yeah, not bad. You got a point move. You got over 10% move in that one right there. El Paso, big gap up today, so that would have paid. You'll see a lot of good setups in here, guys. And revenue growth fishing, it is in Trader's Vault. So if you go to Trader's Vault, you're going to find this revenue growth fishing. And I'm telling you, what this looks for is stocks with strong revenue growth. They got to have 20% of higher. And I have found some really good ones. As a matter of fact, I showed you that CMD, and that's where I found TLRY. And if I go back, I've been talking about this for several months now, and there's just time and time again that I'm finding really juicy trades in there. And here's, oh yeah, getting back to anticipating. All right, there's nothing wrong with anticipating. A lot of people like this TLRY would say, and there's nothing wrong with this. It's just I kind of like to get ahead of the game sometimes. If I can see these patterns developing, I will take a chance, okay, and I'll be quick to get out if it fails. But I know if I'm sitting here and I set an alert at this high going up here, and by the time I see that alert, 680, and the time I grab it right here, it's probably already at $9. When I could sit it, got it down here, I think around 830 or something like that. Nothing wrong with anticipating. Okay, here's the key though when you anticipate. Okay, if the stock doesn't do what you expect it to do, get out. Just move on. Glue would be a good example. Even on this day right here. Okay, I'm sitting in here, I'm anticipating a move right here, but I'm watching the market's slopping all over the place. I gave it a little more time, but honestly, a lot of times I'll just get out on this bar right here. If it breaks, below and closes below that 10-period moving average, that's kind of subjective because, as well as I do, you can get out here the next day, you turn and go, but stops are subjective. Some people want really tight stops. Some people give it a little more wiggle and jiggle. That's fine. That's, like I said, it's up to you, up to the trader. But the key is when it doesn't do what you expect it to do, like I'm expecting this one to continue right here. As a matter of fact, I think I added to my position on this day as well. I mean, but I didn't get killed. I never had a real big position in it, but and my first entry was pretty good, but it didn't work out. Jamie, how am I doing over there on questions?
I do believe we're caught up. By the way, it's so nice to be talking to you without a 3-4 second lag. I just want
yes, I know, I know the feeling. I really do, and I felt bad for you guys because now got that good old rural internet now.
Broadband
I mean,
versus
not rural, but
country.
yeah, I
And
got the, yeah, exactly. I got the broadband versus country internet. All right. When shortlisting a trade, do you only look at moving averages? Shortlisting a trade. What do you mean by shortlisting? When you're shorting a trade?
Or maybe just developing a list of potential candidates, maybe.
Yeah. Okay. Maybe that's what you're talking about. Oh, I got you. The one I'm interested in. No, I look at, the setups. This is probably not a good example because it's Sony.
Whoops. Okay, I don't know if anybody can hear me. I don't know if it was Andy that dropped connection or me, but it would be ironic since we were just talking
No,
about
I can
his.
hear you. You're okay. It would be
Okay, so
Andy.
it is Andy. I guess we jinxed his internet connection by talking about how good it was now. Um, we'll give Andy a couple of seconds here, see if he pops back in. Well, yeah, the go-to attendee panel, Scott says Andy is offline. So I guess something happened. In the meantime, I will see if I can answer these questions here that kind of had a little flurry of them. That's a good question, Shaylin. We do have a stop loss alert, I do believe. And I guess while we're waiting on Andy here, let me see if I can find that for you. Yeah, we've got a couple of alerts. If you just go to your search field within, say, configure on an alert window, if you just type in stop, you'll see we have trailing stop alerts, a couple of different versions of those. So that would be the first place I would look. And Larry, how often do swing scalping opportunities come up each month on average? Man, there's no way to put an exact value on that, but many trades out there, which is the whole kind of the whole aspect behind using a screener like Trade Ideas, because there's over 8,000 tradable securities out there each and every session. The trick is filtering through all the garbage to get to the choice stuff. Okay, well, Andy just messaged me. I don't know if he's going to be coming back up anytime soon, Scott. And we are about 5 minutes till the top of the hour, so probably a good time for the walkout here. And we apologize for the technical difficulties. It's kind of humorous, though, since we were just talking about Andy's internet connection and how good it was. But that is what happened. So I don't necessarily have the stack over here, Scott, for the slides. Do you have them over there?
Yeah, my connection is a little bit mixed up though because I'm on my phone for audio. Let me see if I can share screens using this. Are you seeing the stack on my screen or am I on the wrong screen?
I can see it. Yes.
Okay, good. Yeah, so just a couple items on the way out. This isn't working for me. Okay, well, I won't be full screen. We have a new ebook. It's about earnings season and how to manage it, how to use it to your advantage. It's good and it's free. It's got some cloud links that you can import into your Trade Ideas layouts, as well as some general ideas, even if you're not a subscriber, that you can employ. Just go to trade-ideas.com/earnings and grab it. It's free and ready for you to download. We have a podcast. The Trade Ideas podcast is out intermittently. We try to do it weekly, but sometimes we miss one or two, but there's been some good ones this year with interviews already. So go ahead and search for Trade Ideas Podcast in your favorite podcast app and add it to your subscriptions. Check out some of the previous episodes and enjoy. April showers, I need to update these codes for this month since we had our test drive, but that code is active, so feel free to use it. 15% off your first month or year of Trade Ideas. Go ahead and save 15% off an upgrade or a new subscription. You can follow Steve Gomez, who's usually one of the hosts on the Trade of the Week webinar, at Today Trader. Jamie Hodge is at QuantBot. You can find him by searching for QUANTBOT on Twitter. At Trade Ideas is our other main account. Facebook.com/TradeIdeasPro is the best place to find us on Facebook and like our page and follow us and share the stuff with your friends. You can email any questions to info@trade-ideas.com. And that is the best place to send all your questions. So thank you, everyone. We're going to have a recording up later on tonight or tomorrow. Hopefully Andy works out his internet. And thank you, Jamie.
Yep. Thanks, everybody. We'll see you tomorrow. Bye-bye.
All right. Bye-bye.